I'm saying? So we got my man Mario, he 7, 8 figure earner, run one of the biggest tax empires in the country right now. He primarily focuses on deferring capital gains. So I get how many people wonder that, man, when we build these houses, we sell them, we gonna make 6, 7 figures. The tax bill on that shit gonna be crazy, right? Everybody be worried about the tax bill. And then how many people heard of the 1031 exchange? How many people done it or think it's not really like it's too difficult to do? Like the shit is like it sound cool, but how many people done it? So when we sell houses, and a lot of times we don't even pay them. We put the shit on payment plan. We do whatever we need to do to get by, right? So this is somebody that you want to have on your team. My man Mario, come on up here and give him some of this sauce, bro.
How we doing today? Man, look, y'all in a room, y'all in Atlanta. It's November, it's hot as Hades outside, man. Y'all clap it up for yourselves. All right. So listen, I'm a certified financial planner, and I'm not like any other certified financial planner you ever met in your life. The reason why is because most certified financial planners, they lean into stocks. They want you to do stocks. They want you to do mutual funds. They want you to do ETFs for a living because that's how they make money. The reason why I have one of the largest Black-owned investment firms in America is because I do things totally different. From a tax standpoint, you are able to scale and change your life by doing real estate. Now, I love stocks. However, real estate gives you the opportunity that you'll never get with a stock or mutual fund. And that is being able to buy something and have the IRS help you for the rest of your life with that property. So today we're going to talk about how to do that. If you guys are ready, say change. That was not good enough because I'm going to change you guys' life forever. If you guys want to change, say change. All right, there we go. So a little bit about me, right? So board certified financial planner, been practicing for 18 years. And the reason why mentorship is so important is because it changed my life and it could change yours as well. He'll be here a little bit later. Every time I see him, I give him a big old bear hug. Thank you, Herman. Thank you, Herman. The reason why is because about 4 years ago, he told me, you know what you're doing, you need to change, talk to my CPA. I'm like, why should I talk to your CPA for? We're doing tax strategies. I think I got going on. And my wife, love my wife to death, so she's not here to slap me in the face when I say this. But my wife said, why are you going to pay somebody when you're already making over $1 million a year? It makes no sense. So think about that. I'm already making money, making 7 figures, but I'm going to pay somebody to take me to another level. And my own wife, which I love to death, told me not to do it. So it's people in your ear right now that's telling you not to do mentorship. It was probably people in your ear saying, why are you going to Atlanta to hear people on the internet give you all types of stuff that might be a scam, quote unquote game? Put your hand in the air if somebody told you not to come here. Right? Right? So it's people in your ear that's stopping you from your blessing today. But I'm here to tell you, with mentorship, that can change. So I met a CPA, even though we do tax strategies, and he said, you need to do 2 things different. You need to stop talking about stocks the whole time, lean into tax savings. It's going to change you. That year, I had a $516,000 tax bill. I repeat, me helping people with taxes and investing, I had a $516,000 tax bill. Because of mentorship, being in the room, and not listen to my wife. I love her to death, but not listen to my wife and taking on that conversation, I have not paid taxes since. So just a quick story about me before I get started. This energetic guy, right? So who here is military? Anybody former military? Raise your hand. Okay, I was 71 Lima, certified paper pusher. Who here seen a movie, I'm Gonna Get You Sucker? Huh? Right? So, if y'all see it, I'm Gonna Get You Sucker, Keenan Ivory Wayans, his job, he was what I did. I was a certified paper pusher. Even during the war in 2003, I'm a lover, not a fighter. Everybody was in Iraq fighting for the country. I was in Kuwait pushing papers. So I think I'm Michael Jordan. When everybody's at war, but I'm a paper pusher, even though it's during the war, I'm playing basketball. I come down on the pause, but I come down on the ball on my ankle, and I sprained my ankle, and I had to get an air cast. So the military did a CAT scan on me, and they found a blood clot. They told me, and I had no idea. They said I had applied the blood clot for about 2 weeks, didn't even know. But they said if I didn't have that surgery to get that removed within 72 hours, I would have died. right? So I say that to say the Lord put me here for a reason. So when I say painful profits, just my last name, but it was painful going through that process. But I'm allowing people in the world to make so much money because the Lord gave me this gift. So our profits can be painful, but we're still making profits. So that is my backstory. So again, all my servicemen and women, thank you guys for your service. Yeah, so then we're going to talk about qualified opportunity zone, right? So qualified opportunity zone, I wish I had this good slide because I was going to show you I'm not a person talking in front of you online. I'm doing it in real life. I have 4 qualified opportunity zones that we have done, right? So back in 2017, you saw a lot of regentrification. It was a huge tax break. So it allows you to take the sale of an investment. It could be either real estate or a stock. It doesn't matter if that sale is $5 or $500,000. But that sale of investment, we are able to use that to buy something, basically land, right? And then when that land goes up, as long as we do not sell that property within 10 years, we do not pay any taxes whatsoever at all. So what you have is that people are regentrifying and the IRS is letting them do it. So theoretically speaking, if I holler at Mike, I'll buy me some land, and let's say that land is $1,000, okay? And then I build on that land. Once I build on that land, everything I've done buying and building is a tax deduction, right? 5 minutes. It is a tax deduction. So I am reducing my tax liability. That's great. Take it a step further. If I hold it for 5 years, then I don't pay the full 15% capital gains tax, only pay 10%, right? So that saves me money. But the biggie is if I hold it for 10 years, hold it for 10 years. So literally I'm just renting out the whole time, cashing out refi because we do what? Buy low and borrow high, right? Right? So since I never sold it, I'm just cash out refi, continue to do that. After 10 years, once I sell it, I don't pay any taxes whatsoever. Crazy. So literally I buy land. It costs me, let's say $150,000 to build it. Now 10 years later, let's say it's worth $1 million. That is $850,000 of taxes I'm not paying. That at the 15% tax bracket is $125,000. Raise your hand today if you would like to have $125,000 stay in your pocket. All right. This is why a qualified opportunity zone is so important. I strongly recommend if you really want to make an impact in your community, if you really want to help individuals and you want the IRS to have you do it and pay for it, buy land, get with Mike, and get you a qualified opportunity zone. Yes.
So with these qualified opportunity zones, from knowing from your experience, how are these hedge funds and these major companies able to come in and buy up our land before we can get access?
Because the hedge funds.
It's just the money there.
Mm-hmm.
So go ahead.
Money rules the world. Yeah.
You agree with QBI?
Oh, QBI? A qualified business income. So again, if I'm an S corp, whatever money I don't pay myself that stays in my business, that's a 20% write off. So make it easy. I make $100,000. I pay myself 50. The other $50,000 and pay myself. I get to write off 20% of that. Yep, QBI. Yes, sir.
What are some of the combinations you can put together working with like low income housing tax credits? What are some?
Now qualified opportunity zones are very important as well. With a qualified opportunity zone, you have to have an account, and that account can just be that. Qualified opportunity zone. You can't mix and match. You can't put any extra money into it. It only be that. And then also when you file paperwork, because when you do your LLC, it has to be deemed a qualified opportunity zone as well. It has to be deemed that. It's a certain form when you first do it. When you do the deferrals, it's a certain piece of paper you got to fill out. And then 10 years later, once you do it, it's an extra piece of paperwork. So you need a person like me or whoever your tax strategist is. By the way, you guys have a CPA, tax preparer. Great. It's not enough. You need a tax preparer and a tax strategist. A tax preparer, CPA, they look backwards. A tax strategist looks forward. So yeah. Go ahead. You had a question?
I want to ask you, when you set up your business as the S corp, do you do DBAs as
LLCs considered?
DBA is different. DBA is called doing business as. Everybody should have a DBA, right? So like my company, like my actually company is called Planner Solutions International LLC. That's my company, right? But DBA is called doing business as. So if somebody tries to search for me, it's going to be tougher to find me. So my DBA is Tones Financial, the Relaxed Estate, the Relaxed Investor, Painful Profits, Painless Profits. All those are DBAs, doing business as, but I'm always taxed at Planner Solutions International LLC. Yeah.
I'm doing all these with one company. We're taking that one S corp and creating multiple DBAs.
Yeah. Well, I have 6 different companies, but yeah, all of them have 2 or 3 DBAs though. Yeah. Yeah. Oh, last thing I talked about the capital gains with the 1031 exchange. So once we're doing that, we can continue to do the 1031 exchange. So then your question is, well, how do we bypass taxes, right? Because I talked about that. Because when you, theoretically speaking, you're going to sell it eventually, something's going to happen tax-wise. No, if we do a trust, a revocable trust, not irrevocable, revocable. Irrevocable is good, but conversation for another day. Revocable trust, right? The reason why revocable trust is good is because we get to have everything passed down to the family, tax-free. It used to be 13 million, but now with the new Trump bill, it's 15 million. So if I'm single, if I got $15 million in assets, either real estate, invest, whatever, or less, it passes down tax-free. Or if I'm married, it's 30 million. So I'm able to pass down up to $30 million of all my stuff tax-free. And once we do our trust, if we do it through a quick claim deed, we have a step-up basis, which means it doesn't matter if I bought that first property at $100,000 and now today it's at $1 million. When my family gets it, whenever they pay taxes, if they sell it, they're not taxed on $100,000. They're taxed on $1 million. So they're taxed as if the value of it when I died, not when I bought it. That's why you guys doing a ladybird deed, it is the broke man's way through probate, because you don't go through probate, but you pay taxes as if you bought it when your parents did. So let's say my parents bought a house for $100,000. They died at $200,000. I sold it at $250,000. With a ladybird deed, I'm paying taxes from $100 to $250 because it got deeded to me. I ain't pay no probate costs, but still I bought it when y'all did, right? So that's let's say 15% on 100. That's $15,000 compared to if I did the quick claim deed through a trust, then I only pay taxes on, it was worth $200,000. I sold it for $250,000, that's $7,000. So the question is, no, 26, I'm sorry. Do I rather pay $26,000 in taxes or $7,000? I didn't hear that from everybody. Would you rather pay? Oh, I just want to make sure. I know y'all making money. I know y'all doing all this contracting work and y'all getting all this money, but I'd rather pay nothing in taxes, right? Because I borrow, not sell. But if I had a choice, I'd rather pay $7,000 in taxes, not 26. What questions do you guys have for me?
So you would say it's very good and important to put everything or have established trust.
Yes.
Going through everything.
Everybody in this room should have, again, you can holler at us, we can help you guys do that, of course. But anybody, just want a house alone, you should definitely have it because you're going to be able to bypass probate. That's thousands of dollars of court costs. Sandman's reading me away. I gotta go, y'all. But yeah, so it's thousands of dollars that you don't go through probate for, and it's just a lot of money that you save. So yeah.